Well, Reddit stock had a huge debut on Wall Street. Remember, the company had its IPO, pricing the deal at around $34, and then promptly investors shot that one up big time. It is down today, though, and our next guest is fairly cautious on the road ahead, just considering that big run-up that we have seen. Dan Salmon covers the company as head of U.S. Internet Research at New Street Research, and he joins us now. Dan, thanks for being with us. It was an eye-popping move for Reddit, and I think it may have caught some people by surprise. What's been your assessment of what's happened with the stock market reaction to Reddit?
Well, at New Street, we're an independent research firm, so we don't have a trading desk to get quite the insights on it that some of the bigger investment banks might. But look, I mean, one would presume there's a lot of interest from the retail community. Obviously, the Wall Street Bets forum is well known for its ability to get involved and move stocks around. So we'd assume that there's certainly some retail volatility going on right now. The second thing is, I think there's a really intriguing, somewhat controversial story for institutional investors to manage here. We think it's a really interesting business with their emerging data licensing opportunity, but they've also got an FTC inquiry which arrived just before the IPO price. So a lot of pros and cons for everyone to balance right now.
And do those considerations change when a stock has the kind of move it has out the gate like Reddit did?
Yeah, I mean, in the initiation work we did, I mean, we like to do this with a lot of our stocks is frame, upside and downside cases. And, it's settling back in, as you said today, closer to our base case. We have a price target of $54. But our upside case would be, even pushing up to where it was a little bit earlier. And a bit beyond there. So look, there's always analysis to underlie these things and try to, see what the market's implying at certain valuations. But when we finished up the work we've been doing on it over the last few weeks, we ultimately came out at a neutral rating with just sort of where the price is today.
And I guess, what do you think for anyone who gets excited about stories like this, what do you think the biggest consideration that an investor has to have going forward?
Well, look, I think what the market's going to look at for a stock like Reddit right now is going to be revenue growth, underpinned by their user growth. I mentioned the sort of open-ended new opportunity in data AI licensing, but their majority of their revenue is advertising right now, like most social media companies. And usually the valuation there is really going to be underpinned by the user growth, and Reddit's going through an accelerating period for that right now. They are growing faster than their peers like Snap and like Pinterest. So I think that's the first thing to keep an eye on in terms of giving valuation support, especially when you're at elevated levels like this.
Yeah. Is it, if people are trying to think about the best companies to compare it to, since you watch a number of technology companies, if we're going to be benchmarking how the company does when they report quarterly results and all that kind of stuff, is there a reasonable peer group to compare Reddit's performance to?
I think so. Like I mentioned Snap and Pinterest a moment ago, similar in that they're smaller cap businesses in social media where the majority of the revenue is advertising today. Next you could go to Meta, which obviously has a lot of different things going on, obviously with the size of the company and being a more of a mega cap, much more liquid stock, certainly. That's the group that we generally start with. If you get a little bit more broader, I mean, they talk about their competition going off into other areas of marketplaces, e-commerce as well. But I think the social media stocks is a good tight group to start with, and Pinterest and Snap as the sort of mid-cap peers especially.
And then just a question about profitability. I think, I've seen some of the headlines around the fact that the company's give or take 20 years old, and, investors are still looking for bottom line performance that is in the black. I've covered some of these technology companies for a long time. Sometimes it matters, sometimes it doesn't. But does it matter in an environment where a lot of tech stocks already had some big run-ups. We're watching the market look to some other more traditional stocks right now. Does the rubber hit the road when you report quarterly results and we see what the digestion of it is? Like, how do you measure whether profits today or not matters to investors?
Well, the thing with Reddit's business model, like a lot of social media companies, is that, the revenues are going to come through at an incredibly high margin, right? So the number one thing that should drive profitability in the business is just simply growing revenues and letting it flow through over their current cost structure. There's not a ton of variable cost in their model. It's worth noting the company did get itself to adjusted EBITDA profitability in the fourth quarter last year. We do see them hitting that consistently. They did give a long-term target to have adjusted EBITDA margins of 40%. Note the adjusted part, we are absorbing a lot of stock compensation, which typically happens when an IPO first comes out. But in terms of cash profitability, just revenue growth and operating leverage is the most important thing for them.
Okay.